Not another day of record highs, but we were pretty close. What are your animal spirits telling you to do these days? Sell or buy? Lee Munson, Chief Investment Officer at Portfolio Wealth Advisors, is in New York this week and joins us to discuss. So you consider yourself a little bit of a student of behavioral science and, what people are thinking when they're making trading decisions. Right. What are you hearing from investors right now?
Okay, right now, your average retail investor wants to understand why the market has come so far so quickly, right? They're not taking into account the fundamentals. They're not taking into account liquidity. They're not taking into account things like we don't have an inverted yield curve, which is when short rates are higher than long rates. And when that happens, it's a big recession. But I think people right now, there's a lot of cash. We have a lot of people who dipped out of the market after the election because they disagreed with who became president, and they have yet to find a way in. And so the old adage goes, hold your nose and buy. But I would say most people right now are concerned that they weren't fully invested. And then you have another segment of the market that just wants to sell because we see Dow 22,000. The assumption is we must go lower. I would say, how long have we been at 24-something on the S&P? Why can't we get to 2,500 on the S&P? Don't tell me it's Apple, right?
Right. So are you trying to coach people to be more positive here? Like, are you getting the drumbeat of negative feelings from your investors?
It's starting to creep in. But they don't have any good reasons why other than a nominal amount and things they hear in the media about sell in May or Trump's got to do something silly. They're not focused on what really is going on here. So I've had to explain to people that when we were taking profits over the last week or two, is the day important? No, because the market's just sitting there doing nothing. I've explained to them, we're at this precipice where either we're going to have a mild 3 to 5% pullback or we're pausing to go higher. Right? And to get higher, it's going to be a little more volatile, and then it's going to pop up because we've got earnings, cheap labor, cheap money, the whole thing. So be more positive. Don't politicize the market. Look at profits.
So we are seeing a lot of profits in this earnings season.
Huge.
But earnings season's almost over. Do you worry of what starts to hit the headlines then as we go into the fall?
What I worry about is that we won't have enough negative stuff to get this market to do a full 10% correction, something big. We don't have anything in the hopper for that. What, we're going to do something with North Korea? Whatever. What are we going to do to make this market go lower? And I'm not talking about a 3 to 5% pullback like I think. So I'm worried that we don't have headline news that'll cause volatility. So I'm in a whole different camp of what I'm worried about. I'm worried about not going down enough.
All right. So wait, you're worried about not going down enough. Why? Because it's not going to give us the opportunity to go higher, like a forest fire needs to come through so you can have new growth?
I want asset prices to sell off so I can go back and buy stuff that I just got through taking profits on a week ago and buy back cheaper. If that doesn't happen, a professional manager like me then has to go in and say, well, I've got to buy at a higher price. So when I see volatility this low and I see a lot of complacency, which we see, what you're hoping for is that you get some noise that'll cause a short-term sale where people want to sell their stocks, buy bonds. I sell my clients bonds. I take the burden off their hand of holding risky securities, and that's how I make my money. Yep. Because if you don't have volatility, what are you doing? You're just buying and hope?
What have you taken profits on recently?
Oh, I love this topic. So over the last week and a half, what we've been doing is we've taken all our international positions. I'm a big value player, but anything on the EFA, any ETF that's international is up almost 20% this year. We didn't sell the whole position. We just said if we invested $1 and it's $1.20, take that 20 cents off and ring the cash register. The other big part, emerging markets. How can I not take profits on this? I'm expecting emerging and international to do even better, but at some point I've got to take profits. My clients are old baby boomers, retired out in the Southwest. They live off of what I make them. What I haven't taken profits on and I want to add to is small U.S. U.S. value, U.S. growth, I don't care, just anything small. It's done nothing this year after a 30% run-up post-election because we got no tax cuts.
And you're fine with that we have no tax cuts yet, we have no health care, you don't want to politicize the market.
Here's what I need. I need to have big headlines saying there will be no tax cuts. There will be, they won't be good. And so then small caps sell off, I go buy them, and then lo and behold, we all got along and cut taxes, then it pops back up. So when I'm talking about I'm looking for a negative headline, you caught me. There's only one negative headline I want, that the tax reform isn't going to happen long enough to sell shares off so I can get more of them, and then everybody gets together and we got your tax cuts.
All right. Well, we are waiting for that headline. We will talk to you when it comes out. We'll see what happens. Waiting for your not just a dip, but a correction. Lee Munson, thank you so much for coming in and joining us.
Appreciate it.